Hello traders, Gary Wagner here. Just about 10:30 in Honolulu, 4:30 in New York. It is Monday, June 27th, 2016, and this is the daily report for gold and silver. We do have a nice rise in the precious metals markets today. Gold trading up roughly $8 on the day at $13.30. High today, $13.40. Low today, $13.20. We did make a recommendation to enter a long position in gold. We did that yesterday, of course, Sunday here in Hawaii. We'll talk about that as we pull up our first chart. But markets obviously still reacting heavily to the referendum vote passed last week in the UK, in which they have, at this point, decided to leave the European Union. It raises many more questions than answers, and we're seeing some real uncertainty, and how that plays out in the markets is with the Dow Jones Industrial Average under tremendous pressure. We're also seeing strength in the dollar. We'll touch upon those, look at our current gold trade, all on today's daily report. First chart that I do want to look at today is the British pound. British pound is under tremendous pressure, obviously, with the referendum that just passed over the weekend, considering that it cost you roughly $1.50 per pound just last week. And now it only costs you about $1.30. You can see this tremendous devaluation that we have seen in the British pound. And obviously, I believe that there's actually further room to the downside on this. We just got done filming trending markets, and I'm starting to think that might be the biggest play that could be offered in terms of plays other than gold. Now, I've converted this to a monthly, and the reason that I had to look at a monthly is because on this particular move here, for us to put it into context of when was the last time this market was at or below this area, we've really got to go to 2009. We have now exceeded that low, by the way, and that low was an intra-month low. You see you've got lows here, but not on a closing basis. Of course, this month is not over. If it would close up, that would be the same. That would be true for this. However, take a look at this. If we want to look at points in which it was dramatically or really lower than this point, we've got to compress our chart and go back to 1985 before we find a time when this market was really lower. And at that point, it was at 110. Traders, I leave you with this question before we start looking at our gold charts. What is the probability with what we're seeing that the British pound could actually go close to or go to parity with the US dollar? Food for thought. Let's take a look at our first gold chart. So traders, a nice finish with gold. Gold closing up on the day about $6, currently trading at around $13.28, $13.29. We did put out a special trade alert yesterday. We recommended that our subscribers go long gold. Gold was trading in a range where it was just coming off of some intraday highs. We're marking ourselves in at $13.32. As I said, market currently trading at $13.28 and change. Looking at a half a day candlestick chart. On this candlestick chart, what we can see is that after this market made that tremendous move that we definitively profited from, because we got out at $13.40, which really was the highs that we achieved today. But I believe that what we are seeing is the market forming a base and consolidating. We had a stronger US dollar today, much weaker equities markets. Gold traders, I believe, is still in play. Here's the real question, though. We know, or we believe, I should say, that at some point this market will have small corrections, and we will get, a sub-count within this wave 3 that I'm looking at. So that even when we look at, for example, the last couple of moves, and so when we go from here, this was 2, we're counting this as 1. Within 1, we'll probably see, and we'd have to go to an intraday chart to really define it, but I can at least see a 3 count here. And what I mean by that is this particular wave that we're in, meaning wave 3, is probably not going to happen all at once. It's probably not going to be parabolic. And so with that in mind, we look at the fib extension that we created from this wave 1. I believe it's got to go at least over 1,400, but we have a 61% retracement here. Appears as though that's where this market has stalled a little bit. So my real question right now is whether or not we will see this market kind of move straight past this, or whether or not we'll see this market move and maybe find itself a little bit top heavy. This would be at around 1350, come down maybe to here and then begin to move up. And so that's really the question that I'm trying to ascertain. Now, the reason for entering that trade as quickly as we did is my sense was there was a real opportunity or probability that we would see continued weakness in equities. We would see continued strength in the US dollar. We would see a continuation of the wheels that were set in motion once that referendum was passed. We're certainly seeing that, but realize, regardless of what the fundamentals are telling us, at any point, for any reason, we can see this market quickly turn around just as a technical correction per se. So that's the only thing we want to be careful about. And for that reason, I put a very, very tight stop in this trade at 1314. Now, one of the other reasons I chose 1314 is it was yesterday's low. So if the market trades to a new low, we certainly don't want to be in there. We have pulled enough profits. I just updated our track table record, and we're up around 300% on the year. So I want to keep the profits coming strong, but I also want to preserve equity, more importantly, when we're wrong. Maintain your current long position, maintain your current stop. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.